Hello everybody and welcome back to the channel. It's me, Rob Marsiglio. Today we're going to talk about listing inventory in the Greater Toronto Area. It really took a nosedive from last October till early January. We haven't seen much recovery, but I do believe a flood of listings, as you can maybe tell from the thumbnail, could be on the way, and I want to show you why. Let's start with this chart here. This is active residential housing inventory across the Greater Toronto Area. Just Toronto, Durham, York, and Peel regions on this chart. I didn't start tracking Halton till a little later in my manual data tracking journey. So going back to May of 2022, I have these four regions. Halton has trended pretty similarly though and doesn't really affect the way that this chart is presented. You can see that going back to 2022, we have the usual kind of spring hump that we see in active inventory. We peaked in June. We fell off into the summertime. Through the summertime, we had a little bit of a peak in October. Not much of a peak, and then a fall off into the winter as we'd expect to see, followed by a bit of a slow climb as people waited to see what the Bank of Canada was going to do. And then once May hit, that's when we really saw inventory start to take off. And unfortunately for sellers at that point in time, I think buyer sentiment had been shot by two more rate hikes that the Bank of Canada implemented in June and July. So we saw inventory continue to climb all the way through until October, when it peaked right around the end of that month. For reference, here's what those peaks looked like. So in June of 2022, we peaked at just shy of 15,000 active listings. In October, the peak was a little bit smaller, just over 12,000 active listings. Then again, that slow climb all the way through the year, really. We didn't see too many weeks where active inventory dropped off in my tracking to October 30th, where we had just over 18,500 active listings. Now from October, as we've said, we had a big drop off to where we sit roughly now in January. We haven't seen too much movement in early 2024. But that drop off wasn't necessarily because of sales activity. Fancy arrow alert pointing to this big precipitous drop off from the peak that we saw in listings at the end of October. I've kind of highlighted how inventories changed with this other fancy chart below my head. So from November 1st to January 1st, really this big chunk where we saw the fall off in active listings, we had just shy of 15,000 listings come to markets that would add to the active inventory. We had 7,800 sales that would subtract from active inventory. But the bigger player, which even overpowered new listings were listing removals, people choosing to take their homes off the market. So we saw terminations, expiries, and suspensions account for just shy of 15,500 removals from the system. And that all netted out to negative 8,384 by my count, by the Toronto MLS, kind of the numbers that I track on a daily basis, weekly basis, which don't necessarily line up exactly to the TREB Market Watch numbers, but the trend is the same. So part of my argument, and I think many other people feeling that active inventory will be coming to the market, is, we had a lot of people looking to sell in late 2023, throughout 2023, really. We saw active inventory keep on stacking. People had the intentions to sell. They chose to take their properties off the market because they weren't getting the prices they wanted, maybe hoping for rate cuts to stay in these properties. And that's kind of been one of the counter narratives, that rate cuts could save some people. I had a great little exchange with Smithy over on X, and this is kind of what they are seeing. Investors don't really want to sell anymore because they know lower rates, therefore higher profits and higher prices are around the corner. So the argument there is, let's not sell. Let's maybe just try and lease our property out, because once rates do cut, their thesis is that prices will increase. There's actually no proof that prices will take off once rates come down. And further to that point, the outlook for rate cuts has changed drastically in Canada. Not too long ago, markets were pricing in close to a sure shot that we'd see 125 basis points in cuts by December 2024. Now there's only a 6% that we see 100 basis points in cuts. The markets are thinking it's more likely we maybe only see 3 cuts this year. So all the people who made the decision to take their homes off the market here, hoping for a spring market, hoping for stronger prices and maybe some rate cuts, I guess you could look at this two ways. They either accept that rate cuts aren't coming and get their property to market sooner than later to kind of mitigate some more downside risk of rates staying higher, of property values being eaten away, or they continue to hold out. And I guess that's the case for maybe some suppression. Maybe they don't renew for a couple more years. They're trying to get out ahead of this thing, but they feel rates are still too high. They're not getting the deal they want. They're not getting the number that they want. And by them, again, waiting, we kind of see a similar situation to what played out in early 2023. But let's take a look at some historical numbers and maybe try to project a little bit the range of listings we could see at this peak, and maybe a high best case or worst case scenario, depending on which side of the coin you're looking at. But, what is the kind of top we could expect for active listings come the spring peak, and what is the bottom that we could expect. And to understand that, I think we need to look at kind of the median and the average monthly active listings as per Treb to see how things do trend. Like we said, we see a big buildup through the spring market. Inventory usually peaks in May or June before falling off through the summer, then peaking again in September, sometimes October, just depending on the year. Here's what we saw last year. Again, I'm overlaid 2023, and you could see we were in a very tight inventory environment. All the way through to August, really, we were in a tight inventory environment. We didn't see things really spike until after the summertime. People who were maybe waiting to see what the Bank of Canada were going to do again chose to come to market a little later in the year. We just didn't see the sales come to really meet that supply, and people chose to terminate their homes, kind of bringing inventory back down to in line with what we'd expect to see in December. But our first projection will be based on this kind of median monthly active listings trend that we do see. So the median number that we see in January is just shy of 12,000 active listings at the end of the month. In February, it's just over 13,000 active listings. And then we usually peak out in May or June, right around that 19,400 mark. So that represents about a 63.5% jump in active listings from the end of January to the peak month, like end of June. Now, based on this year's numbers, at the end of January 2024, we had just over 10,000 active listings per Treb Market Watch. So a 63.5% jump in active listings means we'll end up with around 16,500 by the peak in the spring. Now, I feel like that number is a little bit low, 16,000. I think it will be a little higher than that by the spring peak, just based on where we came down from in October. But, sellers are fickle. A lot of this has to do with emotion, and you can't really gauge for that with a model or looking at historical numbers. There is one time period, however, where we've seen similar trends in active listings to what we're seeing right now. And the number that it kind of spits out is similar to that 63.5% jump. This is not a fancy graph, so bear with me, but I'm talking about the time period from 2017 through 2019. So in 2017, we had the Ontario Fair Housing Plan introduced in April. Not only did we have the Ontario Fair Housing Plan in 2017, people often forget that rates did start climbing, not at the pace that we saw in 2022, early 2022, obviously, but we were in a rising interest rate environment throughout that entire time frame. So we saw about a 290% jump in active listings from the end of January to the peak. That's what these two numbers represent. I did the same thing for 2018. We saw 13,000 in January to just over 20,000, just shy of 21,000 at the peak. That represented a 56% jump roughly. 2019, we saw roughly a 67% jump from January to the peak. Then I want you to look at 2022, 2023, and now we're in 2024. So, we've had roughly that 290% jump in active listings in 2022. Rate hikes starting in March killed buyer sentiment, killed affordability. And again, listings came to market and just weren't selling. We saw listings stack up pretty actively, pretty aggressively. You get to 2023, you're looking at a 50% jump, which is similar to what we saw in 2018. So if history repeats itself or rhymes, like they say, will 2024 be similar to this kind of 65-ish% jump like we saw in 2019? Will the much higher interest rate environment that we're in right now drive more people to market? Will it hold more people back? I want you to let me know what you think in the comments below. So we've tried to make a projection based on the historical trends, and we got about 63%. Then we tried to make a projection based on, a similar time frame, 2017 through 2019. I want to go back and look at this one more way, kind of the most interesting way. Don't think really there's anything here, but I thought this was fairly interesting. It's comparing the fall peak in inventory to the following spring peak in inventory. Because again, like I said, that peak that we saw in October of over 19,000 active listings as per the Toronto Regional Real Estate Board and Market Watch was the highest amount of active inventory that we've seen for some time. And here's the chart that I put together for this situation. So you can see at the bottom of this graph, we have the years. So it would be fall of 96 peak to spring of 97 and so on and so forth. The red thin line across here is 0% change. And all these numbers represent kind of the jump or the dip in active listings from the fall peak of one year to the spring peak of the next year. And the majority of the time, we do see the spring peak following year being higher than the fall peak of the previous year. So using these numbers, I've put together 4 different potential scenarios. As per Treb Market Watch, we had 19,525 active listings at the end of October. That was our fall peak in 2023. So let's go through the 4 scenarios. The kind of lowest number that we could expect is based on this 2019 to 2020 change that we saw. And that was a 38.12% drop in active listings in that time frame. And that would result in roughly 12,000 active listings at the spring peak. I think we can all agree that this more than likely will not be the case. 2019 into 2020 and the spring peak in 2020 was extremely suppressed because of the pandemic, because of tight inventory in that time. So I don't think that this one holds any water. Next, we have our highest case scenario, and that would result in just over 34,000 active listings at the spring peak. That's based on 2021 and 2022, and we saw a 75.1% jump from fall 2021 to spring 2022. Again, I think this is a little extreme to the high side because remember, we came out of a super low inventory environment in fall of 2021 to a just rush of listings and buyers moving to the sideline pretty quickly as a result of rate hikes and just uncertainty going forward. So we saw inventory really stack up in spring 2022. The median and the average in this sample size is based on quite a spread. The standard deviation is pretty big across the sample size, but it gives us numbers that I feel are pretty realistic to where we could head in spring of just over 21,000 or just shy of 22,000 active listings. Again, we're coming off of highs of over 19,000 active listings, almost 20,000. So seeing a little bit of a bump up in the following spring wouldn't be shocking. And it's also more in line with historical highs that we've seen in the past. Like as recently as May of 2019, we saw just over 20,000 active listings in the spring. It hasn't been since October of 2008 that we've seen 28,000 active listings. That's kind of our all-time high as per Chubb Market Watch. So the high that we're projecting really blows past that number. I feel like that 21,000 range, crap on the method all you want. I'd love to hear that in the comments too. But I feel like if we ended up at about 21,000 active listings by the time we hit our spring peak, that wouldn't surprise me at all. As always, let me know what you think in the comments below. Of these methods, do any of them make sense to you? Do you think any of them spit out a number that is worth reading into a little bit more? What do you think is going to happen with active listing inventory in the Greater Toronto Area real estate market by the time it peaks this spring? Or will it peak this spring? Will it be similar to last year when we see a peak in the fall again? That's all I've got time for this week. I appreciate you watching another video. Till we speak again next time, please stay safe and cheers.